attend can via YouTube. In case somebody has to cut out early, guys, just so you know, I do send out an email the next day with my link. With my link to all the affiliates out there, to everybody that signed up, with a link to our YouTube channel. So if you ever have to cut up early or you couldn't make a segment, we get a lot more views too on YouTube. A lot more people get involved on YouTube as well. So that's always a way you guys can watch and participate. Again, YouTube, everything is posted, from our business loans, SBA loans, to mortgage stuff, a lot of financial stuff on the Go Accredited channel. But with that being said, again, welcome to this Monday segment. We're going to go over FHA. I'm going to go over 10 key points that make it different than a conventional loan. We could talk about FHA for days, maybe even months. For those of you that are in the business and know anything about financing, the FHA guidebook is a couple of 100-page long with guidelines. There's a lot of stuff to it, a lot of lawyer jargon, a lot of stuff for underwriters as far as how to accept documents, when to accept them, dates, when they expire. A lot of the COVID rules just expired, which is good. But I want to go over a couple of key things and maybe some myths that you guys might have or misconceptions, because I know FHA still has a bad stigma out there that it's a loan, it's very hard to qualify for, but it's really not. They're actually easier to qualify for when it comes to certain things, and there are certain things that you want a conventional. There are certain things that you'd rather an FHA loan. So if you guys have any myths you want me to debunk or anything that you've always heard, again, put it in the Q&A. I'll answer it as best I can. If not, I'll refer to the guidelines and get back to you, because like I said, I don't know it by heart. I know it well, don't know it by heart. And if I don't know it, I just easily refer to the FHA guidelines. So ask away, guys. I'm going to start. So one of the things I wanted to share with you guys is my screen. Sent out an email today with 10 key facts about FHA mortgages. Okay. And here they are. All right. So an FHA mortgage team, just so everybody knows, is pretty much, it's considered a government loan. All right. This loan is almost like, oh God, the government's almost co-signing with you. God forbid you default, it protects us, the lender. Okay. So that's why in every FHA loan, and again, there are ways where it's less or less time, there's something called private mortgage insurance. Even if you put down 20%, you still have MIP, it's called mortgage insurance premium. Now on FHA, there's two types of mortgage insurance premiums. There is the upfront premium, which is paid at closing. It is financed into the loan. It is 1.75% of the loan amount. So for example, if it was a $100,000 loan, and again, I'm using simple numbers, that upfront mortgage insurance premium would be financed in, and it would be $1,750. Okay. Now the monthly premium, some good news, was just lowered to 0.55% of the loan amount from 0.85. So again, there's a big difference. Save the average homeowner a couple hundred a month. This is for new FHA loans only. All right. But it was lowered for the better. Okay. But they raised some of the loan level prices adjusters for people with better credit on the conventional side. So I think to kind of offset that, even though FHA has nothing to do with conventional, I feel it's still both government entities. It's just, to me, it's 1.5, 6.5, whatever the saying is. So here we go. Some of you got the email, some of you didn't. Now, what makes one of the reasons FHA is so attractive? Okay. FHA is very attractive because you only have to put 3.5% down. All right. So that's $3,500 per 100,000. Okay. And a lot of people get into the house throughout the country. It helps home ownership, again, become a great possibility. Now, keep in mind, team, FHA loans can only be done in primary residences. Okay. There is an FHA product for mixed use. I personally have never done one. And there's an FHA product for rehab, which we get into, but it has to be a primary home. Okay. And again, one of the main attractions is the 3.5% down. Flexible credit requirements. FHA loans have more lenient credit score. Yes, you could go down to sometimes below a 580, depending on the people. Right now, I personally, sorry guys, my eyes are a little itchy. Personally, I can go down to a 580 with my bank. I can't go any less. You do have to put a little bit more money down if it is a 580. And most of the time it is something called a manual underwrite. What does that mean? that means it did not pass the automated FHA underwriting system. All right, that's pretty much a pass-fail system. A lot of times with a 580, you'll get what's called a refer eligible, which means it needs an underwriter's eyes on it to approve it. There are some restrictions. Sometimes you have to put 15% down. Sometimes you have to, not sometimes, your debt to income is capped at a hard 43. You can't go any higher than that. You know, you can sometimes go higher. With FHA, I've seen up to 55s accepted. But again, the credit score requirements, my bank personally, we can go down to a 580. And we do close a few a month on those. Not many, but a few, because sometimes the 580s is too bad. But if you have a 580 team, you know, like I say, it's a low 580. Why? I've seen credit scores move 100 points because credit card utilization. If you're dealing with a business owner, maybe college tuition came around, somebody put in their credit card. Maybe somebody bought a gift for Valentine's Day, or they got engaged. They put it on their American Express, and you know, they have 10,000 on there all of a sudden. It could lower their credit score. I've seen a low credit score, not because of a late, just because they utilize some of their credit. So the credit system looks upon that negatively. I've seen 100 points to 120 point swings on that, ladies and gentlemen. So it's crazy what utilization could do. Next, closing cost assistance. Okay, make this a little bit bigger so I can read it as well. So closing cost assistance. Yes, we do close them with down payment assistance team. Again, we close a few of those a month as well. It's, you know, they're not few and far between. It is a little more difficult to qualify because the people that are given the down payment assistance do have some covenants. Sometimes it's a grant, meaning if you hold on to the money long enough, hold on, just waving to some people. If you hold on to the money long enough, it becomes a grant and it's forgiven. You know, I've seen 5 years, I've seen 10 years. It all depends on where we get that money from. And I would also look into, sometimes there are a lot of town and counties that have specific down payment assistance programs that we can work in conjunction with that are a grant. You know, they're looking to revitalize a neighborhood and get people in. They're looking to get, butts in houses, so to speak, people in neighborhoods that just, you know, that maybe they're turning around, you know, the values have gone up. You know, they are a lot of towns and counties that have, you know, neighborhood revitalization programs that will allow you to, you know, get a grant from that county or even the state. So sometimes even if I don't have it available, you know, you might want to check your county or your state to see, because there are hundreds of them out there, guys. We don't know them all, and we'll just make sure it's approved. Okay. FHA mortgages, they are assumable. Okay. Again, I've never seen anybody assume one, but they are assumable. Okay. If you want to sell your house, you might make it easier. Let's say your son or your daughter, you know, or a family member wants to go into the house. Maybe there's not a lot of equity, only in there a year or two. You know, you can give them a gift of equity, and maybe they gave you a couple of dollars to move out because you did the 97% financing, and there is no appreciation, which might happen in this upcoming economy. You know, you might just want them to assume the mortgage and take it over, which helps in a lot of cases. You know, you don't have to wait to be sold. People don't have to go looking for another mortgage. It's easier to get the other mortgage. So there are a lot of benefits to being assumable. Okay. Fixed interest rates. FHA mortgage over fixed interest rates provide stability. So again, they're fixed interest rate team. Even if you do a conventional that have adjustables, the adjustables are pricing out worse than the fixed rate right now. So, you know, I've always gone fixed. Back in the day, you would do an ARM, investors do ARMs. There used to be maybe a 3 or 4 point spread sometimes on a 3-year ARM, meaning it's fixed for 3 years compared to a 30-year fixed. But FHA is always 30-year fixed teams. All right. Streamline refinancing. This, guys, this is huge. Why is this huge? Interest rates are very high right now, at very historic highs over the past 20 years. You know, some people are getting locked in at 7.25, depending on their rate for FHA. Right now, the average FHA rate, I just looked, I believe is 6.49%. The average 30-year conforming rate is 6.625%. Okay. What does it mean to streamline? You don't come out with $1. They don't look at your income again. Sometimes you got to come to you come to the table usually with about one mortgage payment. So you usually skip your mortgage payment. Don't skip it, but we do it close to the month. And instead of making your mortgage payment, which is added to the payoff, you know, you bring it to the closing. So that's what we try and do when you do a streamlined refinance, because you don't have to get an appraisal. You don't need to do income docs again. There is a lot of flexibility when it comes to Streamline, and it's more cost effective because there's a lot of fees that cannot be charged by the bank myself. Okay, so again, this is a great selling tool for the whole, marry the house, date the rate thing. If you have any clients you're talking to, any potential FHA borrowers on this segment, it's a great tool and a great fail-safe to have the FHA Streamline. Again, FHA has been around a long time, no matter where the economy is. I've never seen them take away the Streamline ability. I've seen them modify the program. I've never seen them take it away. This is a little wave to Enzo there. How are you, Enzo? Hold on, team. Run an IG live too. Seems, get everybody involved. Mortgage insurance premium. FHA loans will require mortgage insurance. Okay. I don't care what anybody says or any broker you talk to. I've never seen FHA mortgage insurance waived. It can't be waived. If I'm wrong, then I'm wrong. There might be a very slim circumstance in there, some little obscure guideline that I don't know, but I personally have never seen it, and I've probably been involved in 20 or 30,000 FHA loans over the course of my career that my team is closed and my bank is closed. Okay, I'm doing this a long time, team, 23 years. So I've seen a lot of loans, a lot of situations, and I get surprised every day. But again, always need mortgage insurance. Always. Okay. Insurance which protects both the lender and the borrower. So we're all protected. Again, it's almost like the federal government is co-signing for you. All right. Next, higher debt to income ratios. All right. I have seen debt to income ratios go up to 56%. All right. Now that involves the whole, like I was saying, team, the pass fail system. There's again, automated underwriter that pretty much says approve eligible or refer with caution or approve ineligible, whatever it says, it has to be approve eligible to get the higher debt to income ratios passed. All right. I've seen 57s pass. All right. So it is a good tool to, if you have if it's a newer person buying a house where maybe the housing payment is only 30% of their income, but they have student debt, a lot of it. And that brings their debt to income ratio up to 56%. We've gotten those passed through. The trade-off is the front end, meaning just your mortgage payment, should be lower, a lot lower. It should be in the 30s. Gotten a couple 40s passed. Again, there may be guys out there on the segment that got different ones passed. Kudos to you. I have not seen them. Okay. I've seen 55 of 56s passed through. Okay. Renovation financing. So a 2 or 3K loan. I've only done two or three of these in my career, team. They're more difficult to get done. A lot of times the offers won't get accepted, but they can be done. If you buy a house that's a fixer-upper, we can get it done. Like I said, they're becoming in vogue again. People want to get into the house. They want to fix themselves. There are a couple different line of caveats to it. You need a GC, you need plans, limited to what you could take out. But again, it is a great tool to have in your tool belt. And again, I want to say with a big asterisk, team, FHA loans, again, asterisk point, full disclosure, FHA loans can only be on primary houses. Okay, 1 to 4 units. And the loan amounts, though, are based on the county. So if you're in Wichita County, Kansas, let's say, your FHA loan limit is going to be a lot less than a Brooklyn, New York, or Queens, New York, where on a 4-family, we can get almost $1.2 million. We're scooch under $1 million here in New York for an FHA loan, single family. Okay. I think the FHA, the full family might even be more than that right now. Regardless, I know it's based on the county. So again, if let's say you have a county with $300,000 limit and you want to buy a $600,000 house with an FHA loan, because you might have a higher debt to income or a 580 credit score, you would have to make up the difference with that gap. Okay. You would have to make up the difference with that gap of the difference between the loan amount and the purchase price. You can buy a $4 million house for an FHA loan, as long as you don't go over that cap on the loan limits. Okay. That's really all I have to say about FHA loans, guys. If a lot of realtors don't like them, then we help sell them as to why it's a good loan, mainly because of the down payment, but there's still a bad stigma about them, a bad aura. Sometimes because the house might need to have something fixed, or there does need some different updating in the house. For example, if you have a small porch that doesn't have railings, or stone steps in the backyard that doesn't have railings, you have to add them, okay? There's other little things, sometimes the box and the boiler and the heater need to have certain ages. Again, nothing that's not that bad, and honestly, if they weren't up to par anyway, you might not want to buy the house because it won't pass inspections. You pass my good friend Bobby Vecchione, okay? He sees this stuff all the time. He's one of the best inspectors on the island. And, you know, sometimes if it doesn't pass those things, you might not want to buy the house, and it's not going to meet FHA anyway. So you can go on to a house that has better bones. I am going to get into the Q&A portion of this segment. And let's see what we got here. Okay, guys. Elliot Class, hey Manny, what is the minimum loan amount? What states you're not licensed in? So Elliot, email me. I'll email you the short list of what we're not licensed in. You can take a look. Again, you know, we're licensed in all the major states. Off the top of my head, a couple bigger, you know, more popular states we're not licensed in. Massachusetts, we're not licensed in. New York, we're not licensed in. Okay, those are the more popular states, but all the other big, what we call football states, we're licensed in. The Dakotas, we're not licensed in. Missouri, stuff like that, all those states. You know, we're not licensed in those states, but if you send me an email, Elliot, Manny@getmps.com, I will send you a list of what we're not good in. Okay, Mr. Vecchione, based on the high interest rate environment, I'm curious to know about your plan for people who are buying homes now when the rates come down. Perfect question, Mr. Vecchione. So we have, if you do what's called the non-QM, you guys have seen me doing that. Plans, if you're not an FHA or a conventional, that can streamline. All right, we will not charge any bank fees. All right, just whatever it costs to get that rate, no processing fees, no underwriting fees. You're just going to pay title fees, pay for your appraisal. This is on a non-QM. If it is an FHA or a conventional deal, we can do what's called a streamline, like I just touched upon. Conventional has a similar product and a similar program. It is called a streamline as well. Streamline costs, a lot of times no income docs, just pretty much getting at a better rate in term. Cannot take any cash out of that property on a streamline refinance team. Has to be, again, a rate in term, no money. Most of the time we plan it so you come to the table with about your current mortgage payment with the taxes and insurance. So if your current mortgage payment, for an example, is $3,000, usually on a streamline, you're coming to the table with your mortgage payment. So we try and time it, you know, towards the beginning of the month where we know we're closing in enough time where you're not going to get late on your mortgage. And instead of making your mortgage payment, let's say April 1st, if we're closing on April 5th, we have you bring that money to the table instead of making the payment. But if it goes too far, yes, you make your payment. You always make your mortgage payment, team. It's something that we calculate and we don't risk with. But to answer your question, Mr. Vecchione, when the interest rates get low, which we know they will, if you're in a conventional or an FHA deal, streamlines. If you are a non-QM or DSCR deal or an investment property deal, in other terms, we will significantly lower our closing costs. Okay, I even send out a little certificate for everybody, letting them know that once they close. Hopefully that answers your question, Mr. Vecchione. Some folks think alternative lending is shady. What are some ways you utilize to put folks at ease? A full pre-approval if it's a purchase, you know, alternative lending. Kim, to me, alternative lending can mean a couple of things. You know, right now I'm thinking alternative lending is a non-QM. You know, I get on the phone with a lot of realtors. How do I alleviate it? If you have a deal you send us, we get on the phone with the realtor. I put my name and number in that pre-approval and they ask, well, what makes this viable? Well, unlike other guys, I've pulled their credit. I've looked at all their income and education. So to short answer your answer to the question, Ken, is education. I educate these realtors on why alternative lending is just as good as conventional, and they're able to put a person in the house, or I'm able to put a person in the house that otherwise couldn't get in the house. So the alternative lending, you know, to me, it's not hard money. It's not, you know, it's not, you know, shady, which I understand because there are a lot of shady characters out there. Hence why we all have NMLS numbers. Hence why the government tracks us like we're prisoners sometimes. You know, my NMLS number 59001 follows me everywhere. Every document I send out on a loan has it on there. Right, my pre-approval letters, my emails, pretty much anything that's associated to me has that number on there. Okay, but again, to make them at ease, education is what alternative lending means to us. Okay, hopefully that answers your question, Ken. McFred, I discovered the church loan submitted is not qualified because of income. Yes, Right, they do. There are some things, guys, and just so you know, we could do another segment on church loans. We've just opened up the church loans. They're very difficult to get done, very strict criteria. We close a couple a year, not that many, because it's not that much big of a market for churches, at least where I am. In addition, the lending criteria is the box is like this tiny, guys, like that it fits in. So it's crazy. They're difficult, but you know, that doesn't mean don't send them in, McCred. We'll still get them done. Like I said, they're difficult to get done, but you know, I don't have any alternative underwriters or investors to do them, unfortunately. But you know, we'll get there one day with the churches. Hopefully it'll open up soon. So with that being said, team, if there's no more questions, I'll bid you all adieu. Have a great night. Like I said, I like to keep these about 20 minutes. We're hitting that mark right now. If there's any questions, if team, if you guys, any way to get in touch with me, give me a call, whatever you need. If I didn't answer anything, you know, you got about a minute to get it on, put it in there, I'll answer it. But if you need more clarification, or if you want to go over something with a borrower, call me. McCred, I spoke to him many times. I've seen a lot of names on here. Yvette, speak to her constantly. Jeff Nelson, Farina, Frederick, you know, Gary. I see a lot of names on here for like romper room here. Give me a call, guys. You have my emails. You guys have my cell. I'm constantly answering the phone. You know, let me know, team. I'm here to help. Like I said, the whole thing is education, how to get these things passed through. A few more questions. What do we got, team? Nope, there is no prepayment penalties on information. On information. There is no prepayment penalties on FHA. Thomas, I'm going to type so there's no prepayment penalty. There's no prepayment penalties on any primary residences, team. They're legal in most states, and the federal government has put something on it. So I'm going to put my cell phone number in the chat, guys, for you guys to use. And then here is my email address. Usually have a little QR code. I did not do a slideshow tonight because I felt it was unnecessary. There is my email, team. So cell phone, email. Again, you guys have carte blanche to answer me whenever, to contact me whenever. I'm a quintessential New Yorker. Always never sleep. So if I'm up, I'll answer it. If not, I'll get it the next day. If I can't answer, usually doesn't take me any more than a day to get back to you. Guys, if it's more than 24 hours I get back to you, that means you slip through the cracks. Doesn't happen often. Sometimes I do get busy. But you know, with answering phone calls, and I try and give everybody as much attention. So sometimes stuff goes to the next day. It takes me 24 hours. If I don't answer you in 24 hours, that means I missed it. I apologize. I'm sorry. Call me, hound me. I do not take offense to it. All right. You guys have deals you have to get closed, and you're relying on me, and it's okay. I'm okay wearing that cross and that, and not even a burden. I love it. It's a part of my life that keeps me young. I'm actually 103, but I look 45 because you guys keep me young. But I will speak to everybody soon. If you have any questions, give me a call, shoot me an email. Hopefully this gave you guys some light on FHA loans. Frederick, you're welcome, buddy. Again, FHA loans, guys, they're a very big thing with the non-QM. It helps those 580 borrowers get in there. So like I said, everyone have a great night. Alan, again, in there, get it in the chat, my contact information. If not, I'm sure you got an email today. You could also get a Zoom email that'll have my contact information after this, guys. I'll speak to you all soon. Everybody have a great night. And like I always end, if you're on the West Coast, go make some phone calls. On the East Coast, enjoy your dinner, and I'll speak to all of you soon. Have a good one, team.